The candlestick charts still reveal the overall direction of the market. The Dow traded flat today after trading lower and closing below the T-line yesterday. That in itself told you there was some selling obviously occurring. However, when you add that in conjunction with the analysis of the other indexes like the NASDAQ didn't show any great selling, still trading above the T-line. Today, the Dow was basically flat, while the NASDAQ was trading up 55 points. This clearly reveals that there isn't any investor sentiment change or any selling pressure coming into the markets. This slow, steady uptrend still remains in progress, with the main criteria of a lack of candlestick sell signals and a lack of any trading below the T-line reveals that the bullish sentiment is still in progress. This makes pattern breakouts of wedges, such as an SGEN, still very viable, that there may be another 25-point move in this uptrend based upon this 25-point move over here from this trend before it went into the sideways wedge. The strength of the new trend is illustrated by the best friend signal, a doji, followed by a gap up off the T-line, off the 50, and breaking out through the top of the wedge, giving a good indication that the strength of this next move will be relatively strong, which allows for the prospect of eventually hitting the $100 mark based upon knowing what should happen coming out of a wedge formation. Another factor is when the biggies like Apple, Amazon, Nvidia, all the ones that everybody's following are still maintaining their uptrend. Once again, staying above the T-line, it can be pretty well assumed that there's no selling pressure coming into this market. Knowing that the trend of the overall market is still staying relatively strong allows for identifying wedge type breakouts in individual stocks, as in our recommendation on form. It's still in an uptrend, not only staying above the T-line, but staying above the 3T line after this wedge breakout, clearly indicating that wave 1, wave 2, and wave 3 is now in progress to be the same magnitude as wave 1. The visual aspects of candlestick analysis gives us that advantage of knowing exactly when the bulls are creating a very strong price move. Knowing that the market is not going to sell off with any great resiliency allows for the identification also of one of the major signal patterns. Look at the series of dojis, a cradle type pattern with a close back up above the T-line. These usually indicate very strong price moves. Even if it moved from here back up to here, you're going to get a 45% upside potential. But more importantly, the probabilities are extremely strong after seeing a series of dojis and a reversal that you're going to see a strong price move. The candlestick analysis, being able to identify what happens over and over in human nature, allows investors to take advantage of setups that other investors are not going to be aware of. That'll be it. We'll see you in the chat rooms.